Welcome friends, this is Ramkumar bringing to you the 32nd episode of the Educative series. This will deal with the commentary on IPO or summarization of an IPO of Shree Refrigerations Ltd. This company will be listed in SME segment of BSE. The IPO opens on 25th of July 2025 and closes on 29th of July 2025. The RTA for this company is MUFG in time. In terms of disclaimer, I am currently not registered with any regulator in India like RBI, SEBI, etc. Rest of the disclaimer you can read on the screen in front of you. Now more about the issue details. As we mentioned, the issue opens on 25th July and closes on 29th of July. The anchor investors are expected to invest on 24th of July 2025. This is an issue of 93,86,000 shares of rupees 2 each. The minimum allotment would be 1000 shares, while for application it is 2000 shares. This is a book building issue, hence there is a lower cutoff price of 119 rupees and upper cutoff price is of 125 rupees. If you look at these two prices, the minimum application amount would range between 2,38,000 to 2,50,000. There is no employee reservation available for the employees of this company. Now I'll talk about a brief of the company. The registered office and corporate office of the company is located in Karad, which is a place in Maharashtra. The BRLM, that is book running and lead manager for this company, is Narnolia Financial Services Limited. The market maker is a requirement as far as the SME segment listing is concerned. So the company is appointed Mansi Shares and Stockbrokers Private Limited as the market maker. This company was founded in 2006. This company undertakes mainly government projects and a little bit of non-government projects. In terms of the revenue breakup of the government project as well as the business heads or verticals, it is as under. The government projects for 23, 24, 25 is 63.77% in 23, 81.92% in 24 and 76.84% in 25. So if you see, about more than 75% of the business comes from the government and non-government constitute the remaining percentage. So that comes to 36.2%, 18% and 23.16%. So this is a cause for concern as the business is resting mainly on the government agencies to give them the business. As far as the verticals are concerned, they are mainly into chillers, refrigeration, air condition appliances, out of which maximum business is on the chiller and that also on the marine chillers in terms of industry. So here the percentage or revenue breakup is 73.56% in favor of marine chillers for the year 23. 24 it is 87.92%, 25 it is 83.86%. So you can see that the marine chiller business is the main business which constitutes more than 80% as of 31st March 2025. The company has also taken ISO for quality management systems. This ISO is of 9001 2015 in terms of version. The IPO proceeds of this company will be spent towards working capital or shoring up working capital and for general purpose expenses. As far as the monitoring agency for expenses of this IPO proceeds are concerned, it will be the CARE Ratings Limited, which will be given the job of monitoring this thing. Underwriter to the extent of 100% of the underwriting is done by Prabhat Financial Services Limited. Now, if you look at the main three blocks of revenue, profit and total assets, 23 it was 50.58 crores in terms of revenue, followed by 80.30 in 23-24, followed by 98.73 crores in 24-25. So you can see there is a jump of almost double, that is 100% jump between 23 and 25 in terms of revenue. Profit for 22-23 was 2.57 crores, followed by 11.53 crores, followed by 13.65 crores. So here you can see there is a jump of almost 6 times as far as profit between 23 and 25 is concerned. In terms of assets, for 23 it was 94.3 crores, 24 it was 124.1 crores, 25 it was 185.6 crores. So here also you can see there is a jump of twice, that is asset base has increased by 2 times or 100% between the 2 years, that is 23 and 25. Now the various factors that affect the company, like in all other companies, the 5 main issues are the government. Here, since the factory or the works as well as the registered office and corporate office is in Maharashtra, any policies or rules brought about by government in the industry that this company is operating in or by the central government would affect the profit positively or negatively, the ability to earn profit. Policies also will affect the company if suddenly the government decides that they want to exit private business, they want to go into public business. To that extent, there is a risk on the from the policy front in terms of the government changing the mode of doing business. Third is taxes and tariff. As with all other companies or all other entities in the country, taxes would affect the profitability of the company in a positive manner or negative manner depending on the increase or decrease in taxes. Similarly is the case with the tariff. Since this company is mainly into providing the services within the country, tariffs may not affect that much unless of course the states apply their own tariff, which presently is not in existence. As far as regulatory is concerned, the company has been reporting to regulators like MCA, PF, ESIC, etc. in the past. They will have to now start reporting to SEBI and exchange also. To that extent, the regulatory functions or compliance related to regulatory increases. In terms of litigations, there are hardly any litigations against the company, its promoter or promoter group or directors or KMPs, that is key management personnel. However, if any of these litigations go against the company may have to pay up. To that extent, the profitability will be hampered. The company states in the prospectus that the IP rights and logo right registration is put up by them to the agency concerned, the government agency concerned. However, they have been objected to by either the government concerned because they themselves are not convinced about the reasoning given by the company, or because somebody else is already there standing with the registration of that particular logo. So this is something that the companies objected to, and they are in the course of fighting this case with the agencies. As far as working capital is concerned, since this company is into the business of chillers, etc., there is a high requirement of working capital, which the company would kind of take up from the IPO proceeds. The top 10 customers are contributing to 89.69% in the year 23, followed by 95 in 24, followed by 91 in 64, 91.64 in 25. So you can see that more than 90% of the business is contributed by the top 10 customers, which is a concentration risk. So the company should do something to reduce the concentration risk. Similarly, with the suppliers, it started with 81.17 in 23, followed by 69.15% in 24, followed by 51.79. So here the company has done well in terms of restricting the top 10 suppliers to about 50-52%. So if they go downwards from here, it will be good in terms of not having concentration risk. The statewide contribution is the main 3 states where the company is getting business from in terms of revenue is Maharashtra, Uttar Pradesh and Goa. So these three states together contribute to 69.9% in 2023, 72.1% in 24 and 46.7% in 25. So you can see that here also they have managed to reduce it from about 70% to about 47%. So any further reduction will be good in terms of concentration risk. Now the other factors that are important from the company's perspective is debt equity ratio. The companies maintained a healthy debt equity ratio in 23 of 72.72 times, 24 of 0.63 times and 25 of 0.37 times. However, which is good from the perspective of maintaining proper debt equity ratio. However, there is a negative cash flow as reported in the prospectus. This may, if it continues, this may affect the ability of the company to earn enough of profits. The company is taken unsecured loans from the banks at the rate of 16 to 18%. So this is very high in the conventional sense. So outstanding, if you see as of 31st of March 2025, it's about 4.2 crores. So which is a worrying factor, because a company taking loans unsecured maybe at this high rate is not a very good sign. So they should try to do repairing of their debts or loans to ensure that they get it at a lower rate, maybe half of it if they use the proper channels or the proper banks. As far as the CAGR is concerned, between the years of 2023 to 2029, the company's CAGR growth is predicted to be 3.45%, while the global growth between the year 2024 and 32, that is 2032, is predicted to be at 2.7%. So if comparatively, you can see that the company is predicting itself to grow a little bit faster than the global growth in terms of rate of growth. Insurance, presently it is adequate as reported by the company in the prospectus. However, since they do the checking periodically to see whether they are well insured or not, at times it could be inadequate. So any event occurring during the period when it is inadequate could create problems in the bottom line of the company, because they will not be getting the complete insurance from the company concerned. Now, since they are into the business of supplying chillers, etc., to the marine industry, and that also government companies mainly, government contracts mainly, quality is to be of high standard. If not, they could be having issues with respect to losing the contracts from the government agencies, as well as some of those marquee corporates which they are presently having contracts from. Non-compliance are too many for this company. GST from they have been defaulting in terms of not being able to file it on time from May 2019 till till November 2024. TDS from May 2020 to January 2025. ESIC from May 2019 to May 2024. PF from May 2019 to May 2024, and MCA related forms pertaining to Companies Act from 2019 to 2025. So this is a very worrying aspect in them, having not being able to duly complete the compliances. However, the company in the prospectus has mentioned they have done their internal training as well as laid down processes and procedures to ensure that this doesn't happen in future. But whether it has happened after April 2025 is presently not known. And added to this would be the two more compliances at least, if not more. One is compliance with respect to the stock exchange, another is compliance with respect to the regulator SEBI. So here, if the company is found inadequate, there could be issues with respect to running of the company, smooth running of the company. The company is also mentioned that there is a pre-IPO placement that they have made in the recent past, that is within the last 1 year of placing the IPO. This was all private placements. It was done in 3 tranches totaling to 35,78,559 shares to different parties at the rate of 123 rupees per share and 130 rupees per share. We have summarized the RHP and placed it to you for your perusal. This is meant to be purely an educational exercise to make the viewer aware of the pros and cons of the financials and the strengths and weaknesses of the company. In light of the above, there is no reference to the correctness or otherwise of the price on offer, prevailing grey market price, possibility of listing day earnings, etc. Should you find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel if you are to have liked this matter. Should you have any doubts, queries and suggestions, please contact me at ramkbharosay@gmail.com. Thank you.